Hi and welcome back to another video. In this video we're going to be analysing Roku. Ticker symbol is ROKU and it's listed on the Nasdaq, and it's a stock that yes has been requested on the channel a few times, and it's also come runner up or third in one of the polls that we did on the Patreon page. But it's also a stock that has performed extremely well over the past year, almost a 4x in just a 12-month period. And I started looking at the business to see what exactly investors were so excited about with Roku. After all, aren't they just a hardware streaming company swimming in shark-infested waters if you look at the people who they compete with? Well, in this video, we're going to look at that and uncover exactly what Roku is, why it's such a great business, and lastly, we'll value the company using a DCF method and see if we can come up with a fair or target buy price for the stock today. So what is Roku? Well, in my opinion, there's a lot more to it than meets the eye. What I initially thought Roku was a hardware business, which can be good, but in reality, most of the time, they are bad. There's not really any moat involved in hardware. But I can assure you there's more to Roku than meets the eye, especially if you're like me and made some assumptions about the business at the start and thought, what was the fuss about? And actually, Roku is a company that is very much established, especially in the US and Canadian market at the moment. We can see here they're in 1 in 3 homes in the US and Canada, which is a massive presence to have. They have 51 million monthly active users, 60 million overall users, which again is a very big number. They have 38% penetration of the smart TV market in the US, which is essentially their non-direct way of reaching consumers. That's their Roku operating system and software, which actually allows smart TV manufacturers to have Roku programmed in onto their product so people can access it through the TV. And they've got 31% share of that in Canada as well. They're also expanding internationally. So this is just their penetration in these 2 countries at the moment. They're also beating some of the most fierce competitors on the planet. We're talking about the likes of Amazon, Apple and Google. Going by the numbers above here, they're not just competing with these guys, but they are beating them. Okay, now let's get into a bit more detail about how Roku works and talk a little bit about the business model. So Roku, in their own words, are the company that pioneered streaming for the TV. They started this by selling streaming player devices to consumers, and that allowed a more convenient and cost-effective way to watch TV. All you have to do is plug in the device into your television and connect to the internet and then set up a Roku account. You then get access to a big catalogue of streaming content options. They call this TV on your terms, as you manage the prices that you pay, and in reality will always get more for less versus the legacy cable TV providers. And they operate this business under 2 revenue segments. The platform segment, which is visualized in the top right hand corner here. This is every bit of monetization and revenue that they get and generate from the Roku platform and operating system, which we'll dive into all of that in a moment. But secondly is the player segment as well, which is essentially just all of the proceeds and revenue from the hardware and device sales that you see in the bottom right hand corner. And let's start with the crown jewel of the business, the platform revenue. This is generated through content distribution fees, subscriptions and transaction revenue share, and lastly, but most importantly, the running of digital ads. As I mentioned earlier, a lot of Roku's distribution is through the Roku operating system software, which goes on smart devices or smart TVs and allows people to access Roku through their TV instead of having to buy one of the devices. This sort of ties in though with these 3 revenue generators. So the content distribution fees, yes, they actually do get paid for distributing content on the platform. You would think it's the other way around, that they pay these content providers, but no, they've got to a point where the content providers actually pay them distribution fees. You've got subscription and transaction revenue share, and essentially what that means is anytime someone who's using Roku go to subscribe on Netflix or Disney Plus, Showtime, Hulu, and they do it through Roku, which if they have Roku and they've bought it for that purpose, they're probably going to do, then Roku takes a cut of that. And then digital ads. So that's essentially on Roku TV or any of their live TV streaming platforms. They run ads when that video is paused. They also obviously run ads in between, and they take around a 20 to 40% cut of those ads and then pass the rest back to the content creator. Ordinarily, on any platform, the content creator gets the majority of the ad revenue, or if not all of it. In this case, Roku, they don't disclose it because it is private. It depends on the content distributor as well. So Netflix might be getting a better deal than, say, Disney, for instance, but they're taking on average a 20 to 40% cut. And it's a very, very lucrative business for Roku. As we can see here, the platform revenues make up 73% of net revenue. So of course they are the biggest revenue generator, but they are almost all of the gross profit that's generated. So all of the profit comes from the platform business, makes up 98% currently. Then secondly, we have the loss leader, so the player revenue. Like I said, this is just hardware and device sales. So they're all sold at the cost of production. They actually say this in their annual report. Not sold for profit, all sold at the cost of production. So we can see here it makes up 27% of revenue, but not even a 2% of the gross profit. Actually, in the previous year, it was 0% of the gross profit. So at least it's rising slightly, but still definitely a loss leader. We've seen the same sort of thing with the likes of Amazon and their Prime and next day, same day delivery. They have a loss leader there, but it gets people using the platform. And that's the point of this. We've got here something that I think represents Roku's business model very well. Roku's virtuous cycle, we're going to call it, okay? So here's the device sales over here, the loss leader. This is what gets users onto the platform, okay? They sell them at a lower cost than the competition. They don't sell them for a profit. They actually sell them for a loss. This gets more people onto the platform. They then get more content onto the platform because more content providers want to be on the platform. They want to find new users. They know that people are buying these Roku products and going to be using Roku because they're cheaper than the competition. This in turn drives even more users because people want to come to the platform because Roku has all of these different content options. They then collect more data, and data is very important. We'll touch on that ancillary part of the business in a moment, but they collect more data on these users. They then hold more leverage on advertisers and on the content producers, because at that point they're the ones with all of the user data. So they know what people want to see, they know which type of people are going to be suitable to what type of advertisements, and they essentially begin to build up all of this leverage, which makes them like the mob of streaming. That's essentially what they are, the mob of streaming. They come and collect, and where they hold all that data, where they hold all of the leverage and get advertisers to come to the platform, more content producers to come to the platform, this leads to better generation of revenue per user, which is more or less the end product. It means that Roku's business model is a success. It means that Roku starts to become very much a sustainable platform, but it doesn't end there. They invest it all back into the business, more content, and the cycle starts again. And this is what we've seen over the past 5 to 10 years with the company. It has been compounding year on year on year on year, not just people, not just the users, but in terms of their financials. So we're starting to see this virtuous cycle play out. And so honestly, in my opinion, this is what makes Roku's business model a special one. This is why they're more than just a streaming business. They are the gatekeeper at the moment for streaming businesses, right? They're the one taking a cut off the top. Like I say, they hold almost all of the leverage. And I, for one, love these platform businesses. I love these businesses that can scale effectively by just taking a percentage of what the market wants to see and essentially takes a share of the market. And look, for all the good news that I've just spoke about and how good Roku is, it seems like I'm not the only one who's recognized it, all right? Because we do have a premium price stock, would probably be a fair way to put it. $45 billion market cap, or $368 per share if you want to go by the share count, on 1.7 billion of revenue, and that's not profitable revenue yet. So I will just say up front how this is a stock that's got a lot of good news priced into it already, but that's true bull market fashion, as we already know. Now the work we have to do is find out, is there any value left in this stock? As in, is there the possibility for Roku to outperform all of the news that's already obviously been priced into it? And we'll look at that. But firstly, I want to take a look at the financials currently, because I actually do think with the nature of the business that Roku has, looking at the past performance, especially the near-term past performance, should give us a fairly good indicator of what maybe the next 3 to 5 years could look like for Roku. So starting with revenue growth, as you can see, the numbers have been fantastic. Last 5 years have been somewhere in the region of 41%, and then you've got the last 3 years have been as high as 51% as an average, getting quicker and quicker every year. So, you could argue that that virtuous cycle is starting to become more powerful every single year. I don't think they can compound it over 57% into infinity or higher. I'm not saying that, but definitely we're starting to see growth speed up, and the leverage that Roku have start to become ever more present, especially in their financials. Now, operating income hasn't moved too much. Look, they haven't been profitable for the past 5 years or even since inception. We even saw the struggles that they have with 30% of the business, or 27% now, being sold at cost. So that's never going to be profitable. So essentially, all we're looking at is the platform business here, which is making up 70% of the revenue. Free cash flow, similar story, although they were actually free cash flow positive back in 2020, but we'll take this as an anomaly. But it is a good sign nonetheless. They've gone from 5 years of negative free cash flow to 1 year of positive. So take that as a positive if we can. And they've got a healthy balance sheet, $1 billion in cash. So I wouldn't be worried about them raising more capital, although they probably might. The amount that they're losing isn't much year on year. They've got more than enough cash to cover it. And actually, that cash I'd expect to be reinvested back into the business, or I would hope so anyway. And just a sense check, as we do a lot of the time, put an as-if margin or as-if profit margin on the company if it's not yet profitable to see where the valuation sits. Because we can say, 20 times sales, this is over 25 times sales, which is a very big valuation. But if we put a 15% theoretical margin on it, that means that Roku is selling at 167 times theoretical earnings of 15%. A very high multiple, yes. Can they grow into it? Maybe. Let's take a look. So here is my likely forecast, or what I think the likely outcome is going to be. We are going to look at a couple of scenarios in which you can maybe make the numbers work or justify the current valuation. But here's my current forecast, okay? So I see them growing at around the 50% range for the next 2 to 3 years. I think it's a very good sign that growth has been speeding up the past 5 years, up towards 57%. I do think a lot of that 50% growth in 2020 was to do with the coronavirus and people being stuck indoors and things like that. I don't know how much of an effect that is going to have on the business going into the future, but it's just something to consider. And then just to be a little bit more conservative, I've got growth dropping down to around 35% in the remaining 2 years. And this 44% average growth rate over the 5-year period matches what we've seen in the previous sort of 4 to 5 years. And there's some questions that I was asking myself throughout this forecast that I'll just highlight quickly now. So the one that probably goes with revenue growth is how quickly can Roku grow and how long for? So the big thing for me was how long for? What's its realistic cap? Now, I don't think 10 billion or 11 billion is Roku's cap, definitely not, but I do think it's a big number. I do think it's achievable for Roku. I think estimating up to 20 billion or something like that, Netflix's size in the next 5 years is probably unrealistic for Roku and the nature of their business, but I do think they can be a very big platform. The next question was, how quickly can Roku become profitable? This is one of the burning questions in this forecast. Now, I've got them losing money for the next year. I've put in 5% just to be on the safe side, but really this doesn't mean much at all. And then I've got them gradually getting to profitability towards the end of the period. The most important number is this ending profit margin here, 15%. The thesis here really is that if they're a business with a gross margin of around 50 to 60%, usually what you associate with that is anywhere from 15 to 20% profit margin. I think that's a fair estimate for Roku. It really does depend though how quickly that platform business can scale against the hardware portion of the business, which is the loss leader. If we can see that start to run away with the revenue, then profit may be even higher than 15%. But I think it's conservative to estimate 15% as the maximum over the next 5 years. It'll still be a job well done if they can do it. And for the terminal values, I've pushed it up quite high to 35 times earnings because growth isn't going to be done at this point, and also they're growing at 35%. So that would be a PEG ratio of 1. Again, we match against that for our multiple. The market multiple gives us 57 billion, which I think is probably a bit more accurate considering where the current market cap is today. And you can see from the DCF here that it's not exactly good news. So this does mean that this is probably priced a bit too high for us. 40% overvalued, my model is showing based off of this forecast. And, I'd say this is a pretty good forecast. If the company can pull this off, the CEO would be saying, well, what are you moaning at me for? I've done a very good job. I've grown the business from 1.7 billion to 10.9 billion in 5 years. Problem is they were priced at an extremely high multiple the 5 years prior. It wouldn't be their fault. It would be the market's problem. And so on a 15% discount rate, the intrinsic value or fair price today for Roku based off of this forecast is sitting around 27 billion for the entire company, or a share price of $221 per share. I will just show you quickly what you would need to do, right, for Roku to be a good buy from here, or to be at its fair price from here. So if we boost these margins up to, let's say, 30%, let's say that they can really scale efficiently over the next 5 years and they have really high margins. You're talking almost software business margins with 30%. And we keep the revenue growth so they get to 11 billion in revenue. We still have the same multiple of 35 times. Then that means that we do have an intrinsic value today of around $53 billion or 433 per share. So it would mean that it's undervalued, but you're betting on the fact that they have really high margins and can produce around 3.2 billion in operating income in 2025. Unfortunately, I wouldn't like to estimate that myself. I think that'd be a little bit over bullish, although I'm not saying it's not inconceivable for Roku, but that's what I think is most likely. And lastly, just an IRR calculation based off of what I thought the likely outcome was. It's telling us here with that free cash flow we'd receive over the 5-year period, plus the initial investment we'd have to put up, which is $368 per share. The sale price that we'd get, $473 per share. That's only an IRR of 6%. So although this is a brilliant company, I think it has a really good business model. I think it's going to have very good growth for the next 5 years. I have no doubt about that. Unfortunately, I feel like the valuation very much lets the stock down. I think it's a risky play. All right, there's a possibility they can outperform. There's a possibility that it stays at a very high multiple, and you may see a $100 billion market cap in 5 years. 10 times sales. I wouldn't be surprised, but you're not protecting your downside whatsoever. So unfortunately, that's going to be my fair price or target price for Roku stock. May not be what some of you were looking for, but hopefully it was a good insight to what Roku does and learn some lessons on good company, bad price, because there's a lot of them in the market at the moment. Very hard to find any of these very good businesses undervalued. But that's about it for this video, guys. If you enjoyed it, I'd appreciate if you can leave a thumbs up, subscribe to the channel if you haven't already. I'll make this spreadsheet available to everyone on the Patreon and on the Discord, so go over and check that out if you're interested in supporting the channel and then also getting some benefits on top of that as well. And thank you all for watching. I will see you in the next one. Good luck with all of your investments.